Market structure is the backbone of price action analysis, defining the patterns and trends in how financial markets behave. For day traders who operate in short time frames, understanding market structure is crucial to identifying high probability trade setups, managing risk effectively, and maintaining consistent profitability. By analyzing market structure, traders gain insights into trends, support and resistance levels, and potential price movements, allowing them to navigate the fast paced world of day trading with greater precision. Welcome back, traders. I hope you all are having a great trading week. So in today's video, I wanted to bring you a basic guide on understanding market structure so that you can enter in the markets with a little more confidence. I will save all the announcements towards the end of the video. Let's dive straight into it. Market structure refers to the organization of price action in financial markets. It acts as a roadmap for traders to identify trends, reversals, and key levels of interest. By recognizing patterns such as higher highs, lower lows, and significant support and resistance levels, traders can make informed decisions about when to enter or exit trades. So here on TradingView, we're on gold. Let me go ahead and clean this up. This was from this morning. Look what CPI did. We had consumer price index news this morning on gold, and price just shot up. Look at this. But anyways, this is not what we're here for. Let's go ahead and talk about the three phases of market conditions. We have an uptrend, we have a downtrend, and we have a range. Starting with the uptrend, we know when it comes to any type of market condition, we have to have structure. So for an uptrend, this condition is identified when we have higher highs and higher lows. This low being much higher than this low, and this high being much higher than this high right here. An uptrend occurs when the price creates a series of higher highs and higher lows, indicating bullish momentum. This phase often signals a period of market strength and provides opportunities to buy on pullbacks or breakouts. So when we have a pullback right here, people are looking for buying opportunities. And when we have a pullback right here, we are also looking for buying opportunities. Why? Because we are trading an uptrend market. You never want to overcomplicate it. Whenever you can identify structure of higher highs and higher lows, you're in an uptrend, okay? A downtrend is pretty much the opposite. For a downtrend, we can identify this type of condition when we have a series of lower lows and lower highs. So this high being much lower than this high right here, and this low being much lower than this low right here. Again, you don't want to overcomplicate it. You're simply looking for structure of these type of highs or lows to say that you're in a downtrend market. And of course, just like an uptrend, but opposite, traders often look to sell during retracements or capitalize on breakdowns in this phase. So when we have a pullback right here, people are looking for sells. And when we have a pullback or retracement right here, people are looking for sells. Now, a range is a little bit different. A range occurs when price is going in and out from support and resistance. And we're going to talk more about on support and resistance later in this video, but a range occurs when price is making a series of touches at support and resistance. We have multiple touches down here. This is more accurate. Let's do it like this. Oops. And we have several touches right here. So this phase actually represents a period of equilibrium between buyers and sellers. Traders may use strategies such as buying at support and selling at resistance, or preparing for potential breakouts. And that leads us to the next category, which is support and resistance. Key levels such as support and resistance are crucial in market structure. Support refers to a price level where demand is strong enough to prevent further declines, while resistance is a level where supply overwhelms demand, halting upward movements. You can think of it like your ceiling and your floor. The floor is always going to be your support. The ceiling is always going to be your resistance. So whenever price is above a level, that is your support. And whenever price is below a level, that is your resistance. A significant concept within market structure is the role reversal of these levels. When a support level is breached, it often turns into a resistance level, and vice versa. When a resistance level is breached, or whenever it has a breakout, it now turns into support. So again, whenever price is above a level, that is your support. Whenever it's below a level, that is your resistance. So these levels are constantly changing as price is constantly fluctuating. Now let's look at some real market examples. we will go ahead and delete all this and let's just stay on gold for now. So on gold, the very first thing I like to do is scale out on my higher time frames to identify the market. So this morning we had CPI, which pushed price up. But if we go into scaling on the 4-hour, let's see if we can identify some sort of market structure. So notice how price is pushing up. Let's go and scale on the 2-hour. Sometimes you just need to scale in to see what price is doing, because these candles tend to be grouped up on higher time frames and they separate on lower time frames since all these candlesticks are relevant from one another. So on the 1-hour, what do we see? Is price pushing down or is price pushing up? If you think price is pushing up, you are absolutely correct. Why? Because we have structure of higher highs and higher lows. It's not perfect, but we can see that price is clearly pushing up, forming structure of an uptrend. Now, if we scale in on the 30-minute, let's try to find our levels of support and resistance. So because we know we're in an uptrend market, of course, people are looking for buying opportunities at these pullbacks. So whenever we have a pullback at around this area right here, people are looking for buying opportunities. And then right now, people are also looking for buying opportunities since we are resting at this level of support. Why? Because we had a nice breakout, a nice continuation from an uptrend push, and price is simply in its exhaust phase, waiting to have a push back up once it taps our newly found support. One tool that most retail traders use is the Fibonacci retracement, which allows traders to see that ideal range or zone of entry to catch a buy for that bullish continuation. You would simply place the tool from the bottom of that push to the top of these consecutive bullish candles and wait for price to enter that golden zone for buying opportunities or for that bullish continuation. But in this video, we're not going to go over Fibonacci retracement. If you are interested and you want to learn how to use that tool, I have a separate video in my bootcamp series. But for now, we're just going to talk about the fundamentals of market structure. So this is a really good example of a bullish trend because we have clean structure, we have a nice clean break. And then as you can see, price is starting to pull back where traders would anticipate price to respect this new level of support to have a nice pushback up. Now, it's important to understand that market structure applies to all time frames. Although we have a nice clean setup right here, we can also scale all the way down to the 5-minute and try to look for areas in which price is respecting a structural trend for a bullish market. So if we come over here, I just eyed this in the market. Notice how price is pushing up where we can say, okay, well, we do have structure where price is making higher highs and higher lows, indicating that price is bullish. Why? Because this high is much higher than this one. Let me delete this so you guys can see exactly what I'm talking about. There we go. And this low is much higher than this low right here. Now that we have that cleared, let's look for a downtrend example. Let's just take this piece of price action over here and talk about it. So if we were trading at around this time, and for time's sake, let's just use the replay button. If we were trading around this time and we were on the 15-minute time frame and we just hopped on TradingView, what would we call this market condition and why? Uptrend, range, downtrend. What is it? If you said downtrend, you were exactly correct. Why? Because we have structure of lower lows, that low being much lower than this one. And we have structure of lower highs, this high being much lower than this one. And if we implement the rules of support and resistance, we would have levels in which price respects right here and right here. Price has a nice break, making this our newly formed resistance, has a wick off of that level of resistance where a lot of sellers are hopping in the market because we have a nice pullback, giving sellers an opportunity to enter, and then price just melts. And these are good, solid moves. I mean, that move would have been around 80 ticks, and then this move is already over 100. And this is why I love market structure, because it never goes against its rules, where price is going in and out of a range, respecting the pullback, and having that nice continuation. Beautiful, beautiful, beautiful. And lastly, let's look for a range. Oh, perfect. Right here. Let's go ahead and box this level up or this zone and use this area of price action. Well, let me delete all this first. All right, let's come over here. So a range is a bit tricky because I used to identify a fourth market condition, which was choppy. And a choppy market simply indicates that price isn't the best range, where it's not directly going to the equal low or equal high of price. It's a bit choppy. So sometimes you want to stay away from those market conditions because the market isn't going to provide you the best setups. And I'll show you why in a second. So if we come over here, notice how I said a range is when price is going in and out of support and resistance. Well, if we were to identify some level of support, it would be around this area right here. I'm going to delete this. We would ideally put our support right here, and we would ideally put our resistance right here. Notice how price makes a few touches. We have a touch right here. We have one right here. We have one right here. And we have one right here. So this is a strong level of support. But notice how price isn't exactly making those equal lows. I mean, we have price kind of wicking out over here. We have a touch just about this level right here. So it's not as perfect, but it's going to work for now. And then resistance is actually quite worse. I mean, we have a touch right here, which is good. We have not quite a touch. I'm not going to count that. We have a fake out where price comes above this level, but doesn't quite close above it and continue pushing up. Comes back into this range. And then we have another touch slightly right here. So this isn't the best range, but it is going to work because within a range, people are taking advantage of these pivotal points for sells and buys. So right here, people are hopping in for sells. Right here, people are hopping in for buys. Right here, people are hopping in for buys, sells, buys, etc. You get the point. Now, the reason why ranges are a bit more complicated is it builds up a lot of liquidity. And I'm not going to dive too deep into liquidity. I made a video last week about it, but to simply put it, a lot of fake outs can happen because price will take out previous sellers before correcting itself. So notice how we have this fake out right here and we have another fake out right here where price is simply taking out pending orders before pushing back up and initially having a breakout. So this is why I tend to stay away from trading within a range. I usually just wait for that breakout so I can enter in on that nice retracement to have a bullish continuation if price decides to start a new trend. Same thing goes over here, right? Where price comes back into this range, forms this nice gap in which it has a nice retracement before initially pushing back down, having that breakout, before again having another pullback and then pushing back down. And I think this was the downtrend example, right? So you can actually combine these type of market conditions to find pivotal points of interest. So notice that we are in the range, price broke out. Most traders would wait for that break and retest for entries, and then price came back into this range, and then it came back to that level of support. It had a nice break and retest for a downtrend. So all these market conditions collide with each other if you know what you're doing and if you understand what you're seeing. Understanding market structure is crucial for any trader because it provides the foundation for analyzing price action and predicting potential market movements. By grasping these elements, traders can identify the prevailing trend, anticipate reversals, and pinpoint optimal entry and exit points. It also helps traders recognize the intentions of larger market participants, such as institutional investors, and align their strategies accordingly. Real quick, I want to show you guys how well market structure applies to everyday setups, especially at the beginning of the week. So here on NASDAQ, I just now spotted this out, but if we come to the beginning of December, right before we have this market gap, oftentimes you'll see this before the market opens up on Sunday. But let's go ahead and scale on the 30-minute or even scale out on the 2-hour. Notice how price was trailing up, right? If we come down to around this area, notice how price was trailing up. So if we were trading at around this time, we are obviously in a uptrend market. Why? Because we have clear areas of higher highs, this high being much higher than this one right here, and higher lows, this low being much higher, this one over here, right? And if we scale back in on the 1-hour, we can clearly see this. Now, if we combine this with support and resistance, let's go ahead and scale on the 30-minute. We have a level right here in which price respected before initially forming that gap. And then we can say our resistance is right here. Notice how price reacts to these levels. We have a nice break into this range. It fluctuates a bit, comes back down to this range, hits that level of resistance before making equal highs, pushes back down to range 1. And notice how it reacts off of this trend line as well. You can also use a sideways trend line to visually see what price is doing. And as you can see, it is coming in confluence with this overall bullish trend. So as we continue, notice how price has that break into another range. And what does it do? It continues to push up. Now, the reason why I wanted to show you guys this is because ideally, if you entered in at the beginning of the week knowing you're in a bullish trend, you would have been able to capitalize on a lot of pivotal points for buys, right? Because we had a point right here, we had a point right here. Now we did have a dip, but we could say that price simply took out pending orders or previous buyers before initially continuing in a bullish trend. So that's just something to keep in mind. You know, whenever the market is about to open or reopen, or especially if you're at the beginning of the month, you want to try to eye out a level in which price could have a new trend or have a breakout to have a continuation, or if it's ranging, try to find a key level in which price might react off of. Another thing to keep in mind is that market structure respects previous price. I want you to notice that although we had these levels marked up at present price at around this area, if I scroll to the left, notice how these levels are still respected. We have a breakout right here, comes into this range. We have another breakout right here and a retest. We come over here, we have another breakout, has a retest, comes to this range, another breakout. Let's scroll even more. Okay, I think that's it. But oftentimes you'll see that price respects history, the history of price, the history of price action. Another thing I want you guys to notice is that my chart isn't filled with lines, indicators. You know, when it comes to market structure, you want to practice using naked price. I think that's the main purpose of market structure. It's for you to get a general idea of what price action is doing from a naked eye perspective, based and built upon the foundations of market structure. That's all I have for this video, guys. I do apologize if it was a quick one. Now, one thing I want you guys to do is just practice. You know, when you have the time over the weekend, pop up TradingView and backtest. The more you train your eye to identify market conditions, it's going to make your trading session much easier because you're going to be able to hop on the chart and know off bat if you're in a bullish trend, a bearish trend, or a ranging market. And that's going to be the main factor of your analysis, right? Am I going to look for buys? Am I going to look for sells? You need to have a clear understanding of how this works so that you're not on the charts trying to figure out if you want to look for sells, buys, if you want to wait for a breakout. Just practice. For this month of December, I'm actually doing a 100% discount. I guess you could call it a Christmas gift, a holiday giveaway, promo, whatever. And what I do is basically trade live with you guys, send trade ideas, and do one-on-one mentorship. That's like the main 3 things I provide in the academy. And then of course I have my daily recap videos. So if you guys want to join, if that's something that might interest you, click the link in the description. It will direct you to the page and you want to look for the button that says redeem promo code. And the code is locked in. That is all caps, locked_in, because next year we're going to be locked in together. So I'm super excited for your trading journey. And if you guys have any questions, let me know. But that's all I have for this video. Always remember, we're in for the long game, not the short game. Until next time, see you guys in the next video. I'm out. Peace.